I'd be surprised if the next time we got above 240, we didn't have that move for real. Another leg. Let's look at the daily, just as a quick reminder. So the last one was here, last up leg. So we ran up after the election, moved sideways for almost 2 months. We did gap above the resistance. We're coming in. 4 days of consolidation, we broke and then just trended up for 1, 2, 3, 4, 5 days sideways. A little bit higher. So if we go back, this one's actually been almost 3 months now, right? This is your little Trump top here where we tweeted about how awesome the stock market was. We got our lower high. We got our gap fill here on special prosecutor. And look, each of these events just creates 1 or 2 days of volatility of selling. And like that's the pattern. Brexit, the election, and all you're doing in those when the market takes out recent support in one of those events is you look to kind of get long volatility, trade the VIX ETFs, and then you look to get long when you get into kind of a gap fill space. Then you buy out of the money calls. When you're coming down here, you go out to the following week and you buy calls for like 240 in case you get the V bottom and then the rip to the upside. That's been the pattern for so long now, probably all the way back to March of last year. And then there was a pattern, that was the pattern years earlier as well, just got interrupted with when oil collapsing and some other things brought some volatility for a couple of spurts here and there. But outside of those time frames, it's been just such a reliable trade in terms of market pullbacks. So if we zoom in, I think any type of consolidation above 240 this morning and then a break to the upside, you look for us to take out last week's high. A failure here at 240 would look like a move below 239.30 and then a hold and then a break to the downside. IWM. So IWM gap down to 137.5. So that's what I'm watching here. I'm watching this 137.5 on the open. If we go to the upside, does it actually hold in this area here, or does it get rejected and start to roll over again? But it certainly is bounced with this bias. Good thing. A little steeper and a little bit not as good. So if this fails here, and we get back down below 136.80. Look for another rollover. All right, so take two, TTWM. Market very confused. The numbers came out. They were very out of whack with kind of what the estimates were, both on the EPS side, the revenue side. I don't know if there were one-time events that didn't explain, but you can see that's why it went down to 62 initially. Now it's, Jesus. So now it's got, since I started looking at it below 70, it's now got up another $1.50, $2. So it's probably going to be very strong today. The initial selling was wrong. This is what it looks like. It's in a very strong uptrend, which recently began to accelerate. Anytime you're looking at longer term uptrends, you kind of do this baseline trend, and then you look for a spot where it got steeper and then steepest. So this probably won't maintain itself that much longer. Steep uptrend line will probably get broken at some point and maybe lead to some sort of consolidation like that. Once it kind of holds below VWAPs, I'll be looking to 650,000 shares already in the pre-market, which is over 40% average daily volume. So you can see here was the initial top back up to 70 this morning. It pulled in. That's a nice pull in, almost to 68. And then the consolidation at 70, now the next leg. So I guess now we change our pullback look for, let's say, 70.30 to 69.80, somewhere in this 50-cent range. Pre-market high, break from consolidation. So what we'll look for when it tops out, whether it's in the pre-market or on the open, is some sort of pullback and retest of this area right here where it broke out from that pre-market. So again, unlike what was it yesterday, RDUS, which had a history of gapping up and getting sold from the area where it was, this is the more likely path on this one, even if there's some initial quick profit taking, is to catch a bid and then start to move higher. Momo. This may be the only one. Maybe you can put something in the chat if you think there's have there been any really good IPOs the last 3 years that have kind of been strong on the IPO and then broke to the upside? I can't think of any off the top of my head. So here's the IPO on this one, 17. It actually took it a while. I mean, it moved sideways. It actually went down to below 10. I'm going to finally took out its IPO high at 20. What was this? Last summer. It failed up here above 27. Rolled over. Then once it got back above 20, it's been in a really nice uptrend. When you zoom in and it was some up and down action. Actually, this is a consolidation. Would be considered consolidation here, and this is another consolidation here. The most recent one was pretty tight. This is what it looks like. Something's at the high, and the ranges are this tight. It means people are very slowly trying to accumulate it and just not letting it pull back at all. Clearly, they were right accumulating it here in the high 30s. It's gapping up this morning. It was bought ahead of earnings, and it gapped up ahead of earnings. It was sold, and then the numbers turned out to be good. Although it's come off now from the pre-market from 46 to 44.5.
I do wonder if there might be
Let's zoom in. So it was at 46 yesterday morning. Came down, consolidated. I mean, this is pretty clean, actually. I think I heard some chatter about it yesterday morning on the desk. So it came off. Then you can see spike, lower spike, lower spike. Finally takes out the morning low. It was clean. You can see see this wick right here? That's what it looks like when people are all making the same kind of trade. They're all looking at this morning low. Everyone blasted and wanted to get short. And see, after those initial blasts were over, it popped back up, but it never held above the morning low again. So they got lucky there in terms of never having to cover, assuming they gave it the proper stop. Then it had a leg down of about $1.50. And so let's keep that in mind. If this does have an opening drive and consolidates, second move was clean yesterday. Stocks tend to be fairly consistent, and whether they're clean or not. Today,
the secondary goes into the week more, so I believe they'll announce the price sometime after the close.
Okay, so this morning it was down at 43. Numbers come out. Numbers are really good. Comes back up. It takes out this 44. 2 points. So this can break. This can break either way. I prefer to play it.
That's the thing. There's no guarantee.
To break this way.
Now,
certainly, if it starts to hold below 44.70, you can play it for the move to here.
Say price is at like 10.50 or something. That would probably be considered very bullish because you're diluting the stock by 50.
Good volume here.
And you only, you're basically able to get 10. You're only like a 50.
I think the way you want to look at this is if it starts to hold above 45, you can be long it, but you'd really like to see it get above 45.20-ish. Once that happens, maybe sell a little bit into the half here, and you're in the driver's seat and see what happens. It's kind of in my mind. I would think it's on the conference call right now, so it has come off a little bit in the conference call. The next one is Toll Brothers. I don't know. I keep on talking about these home builders every once in a while. They seem to continue to be a big pain in the butt when you trade them, but they do trade off of the half and the whole numbers. Most likely to this matter. So the numbers were good. The guidance I thought was good. It's the leader. It's the leader of the sector. They sell the most expensive houses. They sell a lot of them. Here's a longer term chart. What happened was there was like a really nice run in the home builders following the financial crisis in 2000. So from the lows in 2011, remember the market bottomed after the big sell-off from August to November. It rallied up really strong over the next 10 months, and then it had this big consolidation. I thought for sure, this was such a long multi-year consolidation that you'd get a break out of it. It broke to the downside and then just came back in. So this stock hasn't moved now. Coming up on 5 years in a few months. It's remarkable, actually. In fact, I would pay attention to this. If this gets back above its 39 bid right now, you notice in the next few months this thing's just spending time above 40. I would put it on as a longer term position with a stop below probably $37 or something like that. So I think the millennials are getting older now. I don't know if they can afford these houses, but there is kind of a trend towards more people buying houses. So for our purposes, it's gone up to 40 a few times. It always fails up there. So even if it does run up to 40 today, you're looking to fade it. I put on the sheet 39.5 and 40. So I even thought maybe it wouldn't even get to 40. So I put 39.5 as a spot it might fail. The easiest trade for the last couple of years has been I found to be fading these suckers. And they overshoot to the downside usually. So it only trades 2 million shares a day, but on a day like today, we'll trade between 5 and 10 million shares. And then finally, Agilent A. They beat by 10 cents. They were conservative in guidance by 3 cents down, but when you combine those two numbers this quarter and next, it's still pretty nice size beat overall. I think that's why the stock is still up. It's another one in a pretty nice uptrend after break out of this consolidation and then the retest here. Another consolidation and a break out of consolidation. All right, so yeah, this is, it stopped at this longer term kind of resistance 58.5. Above that, there's nothing. So, then I guess being able to pick some up, I'm going to for support on this 55, 70%. I guess no real support till down here. I guess how I look at it is 50.5 is the longer term support as well. It's stopped there in the pre-market. If it fails there again on the open, you can short it. You'd want to see it hold below 58 though, and try to capture that move back down to the support area here. If you short it here when it fails, and it comes down and it's not holding below 58, I'd just be careful about staying shorted. RDUS. Now this was the number one idea yesterday, number one on the sheet. And we just talked about the history of last time it got it up to the 42 area. It sold reversed hard and then they crushed it the next day. And so that's why we talked about 41.5, 42 as being a spot where you could fade it. You have to be quick about it. So let's see the wick here. It got up there and came back down quickly. Let's zoom in on the 5 minutes, see what it looks like. So after the initial failure up here at 42, in the second 5 minute bar, got below 40. I think 38 was probably the first spot we had as potential support. It did bounce a buck from there. Before consolidating below, taking out the morning low, came off another $1. I think we had 36.70 to 37 as support, and it did bounce off our support area. So, that's why it's important when you're kind of formulating your plans and you go through the morning game plan. What you want to do is, we cover 6 to 8 stocks. Maybe 2 or 3 of those are ones that that you like in addition to what your own morning prep. Um, Make sure you understand the top of resistance range and then the bottom support range on those stocks. Those tend to be pretty good target areas for kind of failures, reversals, moves off of those prices. So I think that most likely is because we're good at identifying where other players have gotten into those stocks. And so they're likely to sell or buy at those prices again. And other experienced people are looking at those prices as well, so they've become a little bit of self-fulfilling prophecy. The other way to use them is if they don't fade there, if they actually break through those areas and either hold below or hold above, generally there's a trade there as well too. Same thing applies this morning, 37 to 36.70 support, and on the resistance at 39, this area where it failed here on that morning bounce, and then 40 as well. HUN, they're doing that merger with the Swiss company. It's tough. I mean, unless you were shorting in the pre-market. Right on the open, I did try to short it. I couldn't get a print. I don't remember the price, around 28.15 or something like that. And so then when it came off hard to 27, tried to catch the reversal. Got pretty lucky in the sense that it came off very hard. And I was basically making a play into the prior day's morning support into 26.10, and it did bounce from there, 80 cents. Only reason why I didn't get crushed in it. After it bounced up here, failed here again, came back, never got through the prior day's support. So it's being bought between 26.10 and 26.20. Continue to use that as support. Continue to use 26.70 to 27 as resistance. And then you can make a trade if it moves outside of that range. You can make the trade as well. Amgen, I did try and short it in the morning. I didn't really watch it. I got stopped out. Where did I get stopped? Here. Pretty much, I guess, at the high, right? I got stopped out on this wick here. God, I got to get the reversal script on. So it topped out there at the morning at 10, came off $1. Of the morning support, then made your lower high at the whole number, held a little bit lower, and then it was pretty good as a short for $1.75. I guess it came off a little bit more later. But yeah, it actually came off. So kind of failed here again. So it's pretty clean as a short the rest of the day. So this morning, if I try to short it again, some glutton for punishment. I could give it a shot right here at the 53.5. The two spots are 53.5 and 54. Look for it to finish that down move down closer to 150. That's it. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important, and how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.